All right. So, how do we actually get rid of our inventory? If we are using the inventory center to keep track of our products, how do we actually see our inventory change? Well, we do that by selling our products, okay? So, as we mentioned before, right? When you sell a product, all right, because when we set up our item in the first place, we linked it to multiple different accounts, right? We linked it to our inventory account, which is an asset account. We linked it to our sales account, which that means when we sell our product, right, we're essentially going to get rid of the product, right? So that's why we linked it to another account called the cost of goods sold, which is an expense account. So the way that we understand how the accounting works behind the scenes is when you sell an item, right? In order to get rid of it off your books, you're going to create an expense, right? Because an expense is representing of getting rid of, using, or spending, right? We're not spending money to get rid of our inventory because we already purchased it, right? We already spent the money to begin with. So in this case, we're using the expense account to get rid of. So cost of goods sold is a direct correlation to your income. So again, if you remember the matching principle, right? Matching principle means you need to match all of your income or all of your revenues to the associated and respective expenses, and that's going to be one of them. Okay, so again, now that we understand that, and that's why we also link it to our inventory item, because in order for us to get rid of our items, we're going to expense it and take it out directly from inventory. So therefore, again, this is going to be one of the most crucial transactions that are linked to multiple accounts. So that one sales is going to be linked to 3 accounts. It's going to affect your inventory, it's going to affect your cost of goods sold, and it's going to affect your income as well. Okay? So how do we actually get rid of my items? So let's take a look here, right? We already took a look at my products and services list, right? Where we have X amount of items that we have on hand, right? We're going to constantly be looking at this section here because this is where we're going to see where the difference actually happens, okay? So here we got 40 of the black, 40 of the bronze, and 50 of the gray, okay? So let's take a look here what the first example here is if we decide to sell our product, okay? So we're going to create a sales receipt to Satterley Wedding Planners, okay? No need for sub account, okay? So, or sub customer, right? We're just selling it directly to Satterley, and we're going to sell it on March 9. Mike Mizuki is going to be the representative here on a credit card, and we are going to sell to Walnut Creek location. We're going to sell 20 of the black picture frames, 20 of the bronze picture frames, and 10 of the gray picture frames. And of course, tax is going to be based on Santa Clara. Okay, so let's go ahead and get started. So March 9, okay, to Satterley Wedding Planners. So once again, I'm going to go to my plus new icon here, and we're going to click on sales receipt, right? Because what this person is doing is they're paying at time of purchase, right? At time of sale. So again, Satterley Wedding Planners, right? No sub-customer necessary, where they're purchasing it on the 9th of March. Okay. And let's see, we have sales rep is Mike Mizuki. This is sales receipt number. Let's see, sales receipt number 1100 for the Walnut Creek location. Okay. And this is going to be retail. And then, of course, we're going to go ahead and list out all the items that we sold. Okay? Starting with the first one is we sold the black picture frames, the bronze picture frames, and we sold the gray picture frames. Okay. Now, how many did we sell? We sold, what was it, 20 of the black, 20 of the bronze, and 10 of the gray. Now, remember, right, because we filled out our inventory item to begin with, and we designated a sales price, right? So again, instead of having to memorize all the sales price for each item, again, because you have a system that will pull that information in there for you, it already told me that I'm going to charge $37 for the black, $35 for the bronze, and $34 for the gray. So there you go, and they're all taxable. So I do need to designate that this tax is going to be from the Santa Clara location. So therefore, grand total that they owe you is $2,017.02. So does that match? 2017.02. Yes, it does. Okay. And when everything looks good, I'm going to go ahead and save and close. Okay. So now that I saved that I sold those items, now boom. My low point has been flagged for me, but I don't need to, I need to restock it soon, but it's still in stock, if that makes sense, right? It hasn't flagged me that it's out of stock. But if I go ahead and take this out, right, what you're going to notice is, boom, right here tells me that I only have 20 items left of my black, 20 items of my bronze, and I only have 40 left of my gray. So like I mentioned, so you want to be very careful because that one transaction had automatically updated my inventory just like that. Okay? All right? So that's how we update our inventory in terms of selling our items, right? Because we designated exactly how many items that we sold, it automatically converted into this. Okay? So that is it for that one. So let's go ahead and do a second sales receipt here where we're going to go ahead and sell to Miss Nao Garcia on the 15th of March. Okay? And we're going to go ahead and she's going to pay with a check. Okay? Check number 5353. Okay, for sales receipt number 1001. And what we're going to do here is we're going to sell 10 more bronze picture frames. Okay, all right. So let's go ahead and complete that transaction here. So once again, sales receipt. Okay, so, all right. So once again, this time it's Nao Garcia. There you go, Nao Garcia. Purchasing on the 15. Okay, purchasing on the 15. Okay. Once again, Mike Mizuki. Okay, sales order 1001 to 11101 Walnut Creek. Okay, so I believe I forgot to fill out this last section from the previous one, right? You need to identify how the customer paid. So again, this is retail. Okay. So how did the customer pay? We said she paid using a check. Okay. Anything here, you're going to put the check number, right? Check number 5353. And where is it going? It's going to go to payments to deposit. So the previous one, you need to make sure that it's the previous person paid with the credit card. And again, you can always go back and modify it. In this case, you just missed that section right there. So in this case, right here, you want to identify that they're paying with a check, and it's going to be payments to deposit. Right? And what did they buy from us? They bought more picture frames. Okay, let's see, which picture frame did they purchase from us? They purchased bronze picture frames. Okay. How many did they purchase? I believe they purchased 10. Okay. 10 of those bronze picture frames. Once again, it's taxable, right? And we're going to put it at Santa Clara tax. So therefore, this person owes me $396.79. Okay, which they paid using a check. So in this case, I can save and close. So once I've done that, boom. Now I look at my inventory center here and see that now my bronze is low, right? It's gone to the point where I only have 10 items left for my bronze. Okay. So that is the unique feature that you can do that can help you keep track of your items much more easily. Okay. All right. All right. So any questions there? Okay. Now, for any reason that you need to adjust your inventory, okay? Inventory can be adjusted due to many varied factors, okay? So I've mentioned one of them before, and that is due to the market, okay? Especially when there's supply and demand. When you have supply and demand, that will cause your inventory items to either raise in value or it can lose in value, okay? So if you're looking at electronics, right? We all know that electronics and technology keeps advancing every year. And therefore, when you purchase inventory items such as, maybe laptops or, iPhones or things that have technology in it, for sure your inventory will lose value over time because, again, there's always going to be the later and greater and more up to date with the newer technology out there. So therefore, your assumption here is the price that you pay for buying these inventory items can lose value in very significant value over time due to technology and the market, right? Other examples where you'll have an inventory increase is, once again, if, let's say, wood becomes more obsolete or wood becomes more rare and is not in supply, that can cause your price of your wooden picture frames to go up in value because it is now much more costly to produce a wooden picture frame. So again, there are many reasons why you would have to adjust your inventory due to the market. And this is what you have to do. So this is a requirement when you are dealing with inventory, is you have to deal with the lower cost or market, okay? And that is when you have to adjust your inventory to the market pricing or the market cost, okay? So again, in this case, we go into more detail in the accounting program. However, for this, just to let you guys know that it's straightforward, right? Inventory cannot hold its value due to the advancements of technology, but also due to supply and demand and the abundance of natural resources that is able to produce those items. So that means we need to constantly update our inventory as often as possible. Normally, this is done at the end of the year, but when it comes to technology, that can change pretty quick, right? So in this case, you definitely want to make sure that you run your inventory adjustments quite often. That means you're going to be needing to do your research. if you're the inventory manager and you're purchasing all of this inventory, you need to do your research to determine what the market price is currently at the value of the market, right? Not what you purchased it for, but you need to determine the market price. Okay, if you were to see other competitors or see what other other companies are selling, is what you're going to be using the market price for, seeing what it's valued at. Okay, so in this case, we're going to go ahead and go to the plus new icon, right? And this time, this is not going to be something that's in the main three tabs, right? So you have your customers, your vendors, and your employees. This is going to be something that's going to be done on the other section, okay? And that's where you're going to have your inventory quantity adjustment, okay? Now, once again, this is only available in the Plus subscription because you're dealing with inventory, and inventory is only available in that one, okay? So in this case, we're going to make an inventory adjustment on the 16th of March here. All right, we're going to do an inventory adjustment shrinkage. Okay, so shrinkage means, once again, your inventory is going to shrink in value. Okay, so if you don't have that that inventory, or in this case, if you don't have that account, you should have it. But if you don't, you can always quick add it. All right, so down here, I wrote here that you can quick add it if it's not available, and make sure it's to the cost of goods sold for supplies and materials, okay? And once again, it's going to be reference number 1, 4. We're going to go ahead and do the Walnut Creek location, and we're going to do the frame 8.5 by 11 for the bronze one. In this case, maybe you took out 2 of them, right, to go ahead and display on in your shop, right? So again, you can't sell the ones that you're displaying on your counter, right? So in this case, we're going to adjust the quantity to 8 because we're going to go ahead and use those picture frames for again. Or in this case, you can do exchange 2 bronze frames to Neo Garcia. Okay, so in this case, maybe Neo Garcia, right? In this case, I believe the book says that she cracked 2 of them. So in this case, she came in to return or exchange for a brand new one. So that's what you're going to do here is you're going to go ahead and adjust your inventory because, again, for a product that you sold to a customer is broken, you're gonna either have the option to refund the money or either give the option to just give a brand new one. So in this case, Neo Garcia is going to receive 2 brand new picture frames. So therefore, we're not going to charge her for it because we already sold her 2 of those bronze picture frames, and it just so happens that 2 of them were cracked or broken. Okay? So let's go ahead and do that real quick. So in this case, we're not, again, selling our inventory again, but we are going to do an inventory adjustment. So once again, you're going to click on that new icon, Other, and right here, Inventory Quantity Adjustment. Okay? So once it does that, it's going to populate this, and what we're going to do here is the date is going to be the 16. Okay? Once again, it's going to be to the inventory shrinkage. So if you don't have this account, you are going to need to quick add that. So in this case, when you have inventory and you set up your inventory, this should be automatically put into your QuickBooks. Because, again, if you're purchasing inventory, the automatic assumption is you will have the potential of shrinkage. So it should be automatically in there. If it's not, you can just go ahead and quick add it. Okay? So there it is, inventory shrinkage. Okay, we're going to refer this as number 1, location. We said Walnut Creek location because we sold to Neo Garcia at the Walnut Creek location. So what is the product that we're looking at? We are looking at the 8.5 for the bronze. Okay, and then it says right here, right, how many you have quantity on hand. You have 10. You're going to put the new quantity of 8 because you're going to again give Neo Garcia brand new ones. And of course, you could put the note here is to replace 2 broken picture frames for Neo Garcia. And if you have the transaction code number or whatever it is, go ahead and put that in there. So the invoice number or sales receipt number, I think it was sales receipt number 1102, I think, or 1101, I believe. Right. All right, so once that looks good, right, everything else, I'm going to go ahead and click Save and Close. So if I actually go to my inventory center here and I scroll down, what you're going to notice is now my my picture frames have been adjusted. Let me see, where is the picture frames? I think I just missed it. Okay. So right here you have 20 of the metal or the black, you got 8 of the bronze, and you got 40 of the gray. So right there, it automatically adjusted this right here. Okay. All right. So again, oftentimes you'll run into situations where that will happen. Okay. Now, what about if I need to adjust my value, my total value? That's going to be something else. Unfortunately, you're just going to have to do a journal entry for that. If you need to adjust the value, if it lost value over time, that's going to be something that's a little advanced. But you're going to have to go ahead and do the inventory adjustment by doing a adjustment journal entry to lower or increase the value of your inventory if that is necessary. Okay, so again, yes. Okay. So let's go ahead and talk about inventory reports. So for all the things that we've been doing here is what were the things that were necessary that we need to take a look at to understand the flow of our inventory. Well, here's something that the QuickBooks provides to you is an inventory worksheet. What this does is it allows you to go ahead and do your physical manual count so that you keep a good track record on hand at all times. Because again, you can't rely on a computer system to tell you how many items you have on hand at all times. Because realistically is that if you don't have a really good system where you're not taking a physical count, right? Who knows? Maybe an employee took an item from the inventory, right? Maybe you sold to somebody, or maybe it was a buy one get one free and you never adjusted the inventory for that. So again, there are many reasons why that you should keep a really good track record, and the best way is that they give you an physical inventory worksheet that allows you to match the QuickBooks Online numbers to your actual physical count numbers. Okay. So again, for any reason, maybe the owner decided to take a picture frame to put it on display. For whatever reason that your inventory is not matching, you do unfortunately have to go back and investigate where that picture frame went. Okay? Because again, you definitely don't want to have to go through the situation where you're just going to write it off as a loss, right? Because that means, there's a possibility of fraud or a possibility of someone stealing merchandise from the company, okay? And that can hurt you in the business in the long run. So in this case, we're going to go ahead and take a look at the physical inventory worksheet, okay? So we're going to go to list, okay? We're going to go to reports, and we're going to go ahead and locate this. So again, I'm going to go to reports. Okay. All right. Now you can go ahead and go through each and every single one of these. So it would most likely going to be in your, let's see. It's going to be where you sell your products. So again, your physical inventory is going to be most likely in here. See physical inventory worksheet. Or once again, if you are not patient to go through every single one of these, you can go ahead and just search it, right? I could just type in inventory, and this is what will pop up. So I get an inventory valuation summary, an inventory valuation detail, and then I have the physical inventory worksheet. So I only have 3 things that I can view for inventory. So let's go ahead and take a look at that physical inventory worksheet. Once again, if you need to adjust it, in this case, there's nothing to adjust. This is basically just tells you what you have currently on hand right now, and this is where you can print this out and you can write your quantities right here. So in this case, it will just list out what items that you have on hand as an inventory item. It doesn't list anything else. It doesn't list all your non-inventory items. It doesn't list out your services or your bundle packages. It only lists out what you selected and had as marked as inventory. Okay. Now, if you remember from chapter 2, I did mention that with inventory, let's say you do create a non-inventory part, right? Yes, you can convert it to an inventory part at any given time. If, let's say, it wasn't a popular item and then all of a sudden it becomes popular and now you want to keep track of it, then yes, you can convert from a non-inventory to an inventory. However, you cannot do the opposite. As in, if you already establish something as an inventory item, you cannot convert that to any other item. You cannot convert an inventory item to a non-inventory or a service item, okay? So in this case, you have to know that just so that you are aware, okay, of making changes when you are deciding whether you want to keep track of it or not. But in this case, like I mentioned right here, list out all the items that you currently have, that you're currently keeping a track record for. It tells you the quantity on hand, and this is the column where you can write in, when you print it out, how many items you actually have physically. Okay, so that's the physical inventory worksheet for you. Okay. So once again, let's take a look at the other 2. The inventory valuation summary and the inventory valuation detail. Okay, so inventory valuation. Let's do the detail first. This is going to give you a track record of the value of your inventory. Okay, it's going to show you what you had available, right, for the camera, right? You have the case, you have the beginning balances, okay? So for the picture frames here, let's go ahead and locate that 8.5. So 8.5 by 11. Let's do the bronze one. So the bronze one here, right? You began your balance right here for the bronze, okay? Right here. You have 8 on hand. Now let me see. If I were to adjust this, let's say right now it's for the end of the year. Okay, I guess that's fine because I'm going to do all dates. Okay. And let's see. And I'm going to go ahead and run reports. So in this case, I don't think I made any changes. But if I take a look here, let's take a look. Oh, here. So yes, when I did that, it changed all the values for me. So in this case, let's go ahead and take a look at that frame right here. The frame bronze. This gives me a track record of, right here for the bronze. It gave me a track record of all the inventory purchases I've made, right? The bill. So this gives me that I purchased it. Right? This also tells me that I sold it. I also received another bill. I sold it, and I made 1 inventory adjustment. So in this case, this gives me a track record of where my inventory was, where it came from, where it went, and what other things that I did to change it. So in this case, it gives you a track record of everything here. That's what I want you to see. So that's the inventory valuation. So it literally, you could see right here that it's making those, as you can see, it's making those changes, okay, for the value of the inventory items that we have, right? Okay. So that's that one, and of course the summary is just going to be an overall outlook of that. Okay. So that concludes chapter 10, inventory. Okay. Any questions? Okay. For inventory. Any questions for inventory? Okay. So we're going to go ahead and go over the multiple choice review here. Okay, so review questions, multiple choice. All right, your job is to select the best answer for each of the following. Okay, so number 1, which product or service type should be selected when adding a new item that you buy and or sell but do not keep track of it. Okay? What item do you choose to create when you buy and sell but you don't keep track of it?
Non-inventory, C.
Correct. Non-inventory, C. Okay. Number 2, QuickBooks Online tracks inventory using which of these methods? Okay, so this one you had to do your reading. How does QuickBooks keep track of the method? What costing methods do they do? So again, here, I'll do a quick lesson here. To keep track of your inventory, right? If you are looking at the way that QuickBooks keeps track of inventory, right? We have 2 methods that we use. We have what's called periodic inventory and perpetual inventory. Because the way that the system is made, it is generally made to be run on a perpetual type of inventory where you're constantly keeping track of every item that you sell, you're constantly keeping track of every time you make a purchase of items, and so on and so forth, right? That's called perpetual because you're constantly updating, right? Perpetual means constantly, right? Like think of like a swinging pendulum, right? Where it's constantly moving back and forth. That's exactly what perpetual means. Now, how we cost it is going to be a method that we use to associate when we sell an item, okay? So when we sell an item, what is the best way that we are choosing to cost out? Now, first in, first out method is going to be very well recognized for grocery stores, right? Because every time you purchase, for instance, milk, right? It has one thing that you need to know is that it has an expiration date. The importance of an expiration date means that you need to sell the first batches that you purchase first. Those things to get rid of first because they have an expiration date, right? Especially milk, right? They can only last on the shelf for maybe, I think, 3 weeks or a month or so, right? So in this case, the shelf life of the item is very short. So we call that first in. So you purchase the first ones in. That means though that batch that you first purchase is going to be the first that you sell out. So that is called first in, first out. Now, other things where we look at electronics or something similar to that. So we use what's called last in, first out. So I gave an example where technology. So for instance, if you're an iPhone, the Apple Store, right? You're going to sell your latest and greatest models first. Right now, I believe you guys are on that iPhone 14, even though you have the iPhone 13 and the iPhone 12, right? You have the tendency of selling your latest batch first. So in this case, right, even though you have all the other inventory items there, you're selling, maybe last year you were selling the 13, and then now this year you're selling the 14. So therefore, the last batch that you purchased, which was the 14, are tendency going to be sold out first. And then the rest of your inventory items are going to slowly sell out after. And then we have what's called average costing, where in this case, if you're constantly selling something that you're constantly like replenishing or constantly purchasing and then selling, oftentimes the average cost is well recognized, because in this case, instead of dealing with which batch came first and which batch came last, you're just dealing with an overall total amount of units that you purchased and the total amount that it cost you, and spreading the cost evenly amongst every item that you have. So for instance, water bottles, right? Water bottles have been consistently the same price at the grocery stores for all these years because of the average costing, right? You can't sell water for a high price and you can't sell water for a low price either. So you have to find something that's right in the middle. So in this case, it's the same idea when you're purchasing water, right? Water is something that everybody needs. Whether it's, whether it's on sale or not, you're going to constantly be replenishing water. So in this case, instead of figuring out the batch that it costs first, especially those manufacturing companies, right? They're not going to raise their prices in that much value in water because it's a necessity that everybody needs. So in this case, you're going to often determine what's called the average cost between them and spread them across evenly. So in this case, that's just an example of that one. So again, now you had to read your book, because in this case, your book should have told you that QuickBooks Online only uses one of these methods, okay? So let's answer the question. So which one is it? Is it first in, first out, last in, first out, or is it average costing? Okay. So QuickBooks Online uses what type of costing method to keep track of your inventory? Okay. In this case, it uses first in, first out. Okay. Now, the desktop versions uses the average costing, but again, in this case, if you choose to do the other costing methods, you do need to do an inventory adjustment all the time. Okay, but it doesn't mean that you're not able to do the other ones. It's just saying that QuickBooks is automatically going to utilize the first in, first out method to cost the goods sold. Okay. Number 3, okay, if your vendor ships more than you ordered on a purchase order, so you got an overshipment, okay, which of the following actions would not be appropriate? So in this case, this question has can be up for discussion. So there could be multiple answers for this one. Okay. So if your vendor overships you too many items, okay, which one would not be appropriate? Okay, would you refuse the extra shipment? Okay, and send it back? Okay. Or would you receive the extra items, okay, and do an inventory quantity adjustment. Okay. Or would you do letter C? You could. Okay. You could update the bill, okay, to receive the extra shipment, okay, into your inventory and keep it and, of course, pay for it. Or D, you could update the bill or that you received the extra items and then go ahead and request the vendor to give you a vendor refund in QuickBooks Online.
If I remember correctly, we decided it was A.
A would be the most appropriate. The
Oh, that's
question, yeah, the question is not appropriate. Because yes, you should refuse the extra shipment and not record it. That is the most correct thing to do. Okay? But we're looking at what would not be the appropriate.
So that it would be B.
B, right? You receive the extra shipment, okay, using the inventory quantity adjustment. And then, yeah. So in this case, the book says B is the correct answer. However, I'm going to beg to differ, okay? Because in this case, you could receive the extra shipment by doing the inventory quantity adjustment. No, you shouldn't do that because, again, that would be stealing, right? And in this case, you definitely don't want to do that. Now, letter D, I think, would be also inappropriate as well because you definitely don't want to adjust your bill to receive the rest of the extra shipment and then tell your vendor to give you a credit. Why? You are supposed to be paying your vendor, not requesting a refund for extra shipment. That is a double whammy there. I think D would be the most inappropriate in this case because it's saying that you're going to adjust your bill to receive the extra shipment and then you're going to force the vendor to give you a credit for the wrong shipment, for the extra shipment. That is wrong in so many ways. Okay? Because one, you're updating your inventory and then you're having the vendor give you money back. No, you should be paying for that extra shipment. So in this case, I would think D is the incorrect answer, but the book says B is the incorrect. The B would be the correct answer, but I also think D would be also the correct answer. All right, number 4. Okay, when you sell a product, how does QuickBooks Online calculate the cost to move from inventory asset to cost of goods sold? So this is referring to the first in, first out method.
So that would be C.
It would be C. It would use the price that you paid for the oldest items in stock. Yes. Right? Number 5, okay, to activate QuickBooks Online's inventory, Okay. A, would you turn it on by going through the dashboard? Nope, that's not a setting where you can turn on and off features. B says turn it on through the account and settings, advanced settings. No, because that one, it doesn't, there's no section for that. Letter C says turn it on in the products and services center. You have to turn it on before you're able to access that on the products and services center. So it's an initial step you have to do. So in chapter 2, or in this case, in the very beginning of chapter, chapter 10, the first thing it told you is to go to your account settings and go to your sales tab and click on yes, I want to track inventory, right? And keep track of quantity on hand. That was the first thing we had to do in chapter 10. So that is letter D. You do need to go to the account settings under the sales tab. Okay. Number 6. Okay. The inventory asset account. Okay. Does it track open purchase orders, okay, of inventory items? Does it B, decrease when inventory is purchased? C, increases when inventory is sold? Or D, increases when inventory is purchased?
I'm going to say D.
D, right. In this case, when you buy inventory, are you increasing or decreasing? Do you have the inventory items? You're most likely to increase it when you purchase it, right? You only decrease it when you sell it. So in this case, B and C are in opposite of each other. And then A, we know that purchase orders does not increase or decrease. It's just a simple request. Okay. Number 7, in QuickBooks Online, inventory can do all of the following except, okay, A, does it provide reports on the status of each item in inventory, including how many are on hand and how many are on order? B,
Yes.
okay, B says use the average costing method of determining inventory cost. So we're looking at the except. Okay, so yes, inventory does do letter A. Okay, C.
You just talked about it being first in, first out.
Correct.
So it's not B.
Correct. It cannot do the average costing. You would have to manually override that by making adjustments for that. C, it does calculate the gross profit from inventory sold. Yes, because again, if you're marking that this is what it costs you, and you mark that this is how much you sell it for, you can run a profit and loss based on products and services, and you can see the gross profit that you earn out of that. So yes, it does calculate that. And letter D, track the open purchase orders for every inventory item. Yes, so remember, just by opening that purchase order, right, you can see what items that you are still pending on and things like that. So yes, it does keep track of that. Number 8, which of the following statements is false in regards to purchase orders? Okay. A, purchase orders are held as non-posting account until you receive your products ordered. Okay. Is that true? That it's a non-posting transaction, purchase orders? That is 100% true. Okay. B, purchase orders, okay, that include inventory items are posted to the inventory account at the end of each month. Is that true?
No.
No, right? Because purchase orders does not affect your inventory asset, does not post at all. It's a non-posting transaction. Letter C, you can list your open purchase orders at any time. Yes, by looking at your purchase orders, right, you can see how many you have open and which ones are closed. Okay. And D, you may close a purchase order in part or in full at any time. Right? We just saw an example where we end up closing out the metal and the bronze picture frames when there was I think there was 10 left that needed to be given to us. We closed them out at any given time. So in this case, D is true. So therefore, the only false one is B. Okay. Number 9. To display the window used to record inventory adjustments in QuickBooks Online. Oh, it's a split question. There you go. Okay. So the question is to display the window used to record inventory adjustments in QuickBooks Online. What do you need? Basically, it's asking which form do you need to go to.
You do the plus new button.
Plus new button, and you're gonna,
C.
which is letter C, right? And you're going to click on inventory quantity adjustment, correct? Okay. Number 10, which of the following is not a report available through the QuickBooks Online? Which ones is not? Okay, so remember, we took a look at 2 of them today.
Is it the goods in process?
Goods in process inventory by item. Excellent. Because in this case, this one, again, because of the complexity of how much content is in the Plus subscription, unfortunately, you don't have this one. Okay. Goods in process is more for manufacturing companies, right? Where you have the work in progress, right? When you're creating a product, right? How much completion is it there? In this case, we don't have that because strictly for the Plus subscription, we're only looking at buying a product and selling it. That's it, right? We're not looking at creating the product. So in this case, you don't have letter A, right? Now we'll talk about products quick report in chapter 7 when we dive into reports. Okay? But it does exist. Okay? Number 11, which of the following statements is not true regarding the recording of receipts of inventory items? So again, which statement is not true when recording receipts of inventory items? Okay. Oh, sorry. Yeah, receipts. I was right. Okay, so again, is it going to determine, right, how you record inventory received depends on how you pay for the items. Is that true? Okay.
I thought it was C.
Let's see. Number 11, you are correct. It is C. You can purchase components and assemble them into new products. Yeah, unfortunately, that is going to be not true, right? Because, again, We're literally looking at a very small business point where you're not creating the product. You can't assemble a product, okay? You can only purchase and then sell, okay? Now, yes, there are ways around it if you choose to utilize it like that, but it's going to be much more simpler than that in this case, right? But C is the correct answer. That is going to be not true, that when you do purchase your items, you're not purchasing them separately and then combining them at the end, okay? Number 12, okay? When when entering a bill, okay, for the purchase of inventory products, okay, which grid of the bills window should you use? Which grids? Okay. So it's saying what section do you need to use when you're purchasing your inventory products?
It should just be A.
Yes, it should be the items, right? Categories are your accounts. Okay. Again, it's only A. So if you remember on the bills form, the very first section you have there is categories, which is all your accounts. And then the second one is going to be all your products and services, which is your items. Okay. Number 13, okay? Before setting up your inventory, it is a good idea to think about what products you will track as inventory because
B.
because you could use a non-inventory product if you do not need detailed reports and so on and so forth. Good, right? Good. B is correct, right? Because again, you only have two options really if you are selling a product, right? Either you keep track of it or you don't. So in this case, you have options, is what this section is telling you, right? That you should decide between the two, right? If you decide to just have them all inventory items, then you're just going to be basically, keeping track of every single item, even if it's the ones that you don't normally sell all the time, okay? Number 14, QuickBooks Online inventory tools are found in the subscription level. Which one?
D.
D, both B and C, right? Plus and advanced, right? So if you guys remember the different subscriptions, you have your start, you have your essentials, then you have your plus, and then you have your advanced subscription, right? So every subscription that you increase in will have all of the features of the previous one plus more. So in this case, if plus is the third one, so the one after that is advanced. So advanced will also have inventory plus more. So in this case, it will have it in the plus and advanced subscriptions. Last question of the day, okay? When processing a vendor overcharge, okay, what do you not want to do? What do you not want to do? Okay. Would you want to wait for a new bill, okay, from the vendor before recording the bill in QuickBooks? Okay? Or would you use the category details tab on the bill to track the error? Okay? Or would you use C to use two separate accounts, okay, with when recording the overcharge? Or D, would you contact the vendor to discuss the overcharge on the bill?
If I remember correctly, the one you do not want to do is to do B.
B, use the category details tab on the bill to track the error, and if you decide to pay for the overcharge, excuse me, and have the vendor adjust the next bill. In this case, B is actually okay, because you definitely do not, you definitely, if that's an option, right? So if you have a dispute with your vendor, right, they can offer you a credit to be applied to a future bill. They don't necessarily always have to adjust the current bill. So in this case, that is actually okay.
Okay, so then it's C.
C would be the answer, correct, right? You would definitely not need to use a separate account when recording the overcharge, and then refund the credit to keep the rest of the transaction from becoming confusing. In this case, no, you wouldn't do C, right? You would definitely do B. I mean, you definitely would do D, right? You definitely would need to dispute with your vendor. Okay, if there's an overcharge, right? Always do that, because you don't ever want the vendor to take advantage of you if they sent you the wrong items or they charge you wrongfully, right? You should definitely go ahead and dispute that. And of course, you could always wait for the new bill to arrive if you've already disputed with your vendor. So then you get the correct receipt or the correct bill from the vendor, so that, causes you to not have to edit the bill later on, right? So if you receive the new bill with all the correct changes of the overcharge and whatnot, then you can go ahead and receive or record it in QuickBooks. So that is definitely appropriate. All right, that concludes the end of today. So other than that,